The parent company of Burger King outlined its global growth plans. Restaurant Brands International, which also owns Popeyes and Tim Hortons, said it aims to have 40,000 restaurants in operation globally over the next 8 to 10 years. The CEO also announced a push into plant-based meats, with Tim Hortons testing 3 breakfast options made with Beyond Meat's meatless patty.
We're excited to be the first to announce a national rollout of Impossible or plant-based protein here in the U.S. and the same in Canada for breakfast. And so we're just going to keep focused on making sure that the product does well in tests, that it's profitable for our franchisees, and that it's operationally feasible so that we can deliver it consistently to our guests day in and day out.
And that sent shares of both Restaurant Brands and Beyond Meat higher in trading today.
In fact, Beyond Meat has been on a tear since it came public just roughly 2 weeks ago. It priced its initial public offering at $25, and it closed up more than 150% on that first day of trading. Since then, the stock has more than tripled. Clearly, investors like this meatless alternative so far, but is it a passing fad or something that could be longer lasting? Joining us tonight is Stephen Anderson, a senior restaurant and consumer analyst at Maxim Group. Stephen, thanks for joining us tonight.
Thank you for having me on.
This is a 10-year-old company. It's never been profitable. Its meatless, plant-based meat is not necessarily a healthy alternative to red meat. It's pretty heavy in fat and salt content, and it's a very, very crowded industry right now. So why has this stock gone up as much as it has in the last 2 weeks?
Well, one key reason, unlike the other meatless alternatives that have been offered over the last 2 decades, this is actually an alternative that tastes very close to beef, and that's why it's been very popular. A lot of the restaurant chains, both in quick service and casual dining, have added either a Beyond Beef or an Impossible Burger alternative, and that's something that's early returns suggest that it's resulting in increased traffic and sales.
So does that put pressure on those companies that have not adopted a meatless alternative to do so, at the risk of losing sales if they don't?
We believe it does, and the reason why is that it really goes after a segment of the population that has really passed by fast food, either because they're vegetarian or they're seeking more healthy alternatives. And increasingly, you're seeing the trend of flexitarians, those who will have a beef burger one day, but the next day might have an Impossible Burger or a Beyond Beef Burger, and it's really catering to that part of the population.
What about the profit question, though? I mean, clearly they're going to have to ramp up their spending to gain this kind of market share and to get into some of these other fast food chains. But can they make it profitably?
Well, I mean, we don't cover Beyond Beef specifically, but what the restaurant chains have done is that they have priced their meatless alternative burgers at a premium to the traditional beef burger product. And right now it appears that consumers are willing to pay for that. That wasn't the case 20 years ago when a lot of the chains came out with their initial foray into vegetarian burgers that really tasted vegetarian.
Do you have plans to cover Beyond Beef? And
well,
how would you rate it if you did?
Well, I can't comment on that at this time, but it's something we'll be watching closely.
That is for sure, and Wall Street is right now. Stephen Anderson with the Maxim Group. Again, thanks for joining us tonight.
Thank you.